Hey everyone, Retire on Dividends here. Oh man, it's been way too long since I covered Rex shares, since I covered FEPI, since I covered AIPI, but now we have CEPI, CEPI. So this video, I'll do an update to all three now, all three of the funds. In every update going forward, I'll include all three of the funds. But first, let's take a look at CEPI and see what the heck it is. So right off the bat, again, the ticker symbol is CEPI. It's called Rex Crypto Equity Premium Income ETF. So obviously, it's going to hold, stocks related to crypto and do, similar strategy to FEPI and AIPI. They recently did declare their first distribution, and it has a 42.06% yield. Which obviously, that's right up my alley because I strive for a 40% yield. So this one, honestly, and knowing how Rex Shares is, that will be, they'll strive for that yield month in and month out. So this one is on my watch list. But first, let's see, a couple things about it. So Rex Crypto Equity Premium Income ETF. Investment objectives are capital appreciation and current income. You'll notice they mentioned capital appreciation before current income. So that's interesting. Investing in CEPI is not equivalent to investing directly in cryptocurrency. Not really going to go through the fact sheet. Doesn't really tell us anything. It did incept in December last year, December 4th. Oh, by the way, I'm recording this video as of January 29th for context, because I'm probably going to launch it the following day anyway. So anyway, let's continue. The NAV is showing 47.09. So again, it's like a $50 fund, just like the other ones. Fund assets around 10 million. Okay, they show 73 holdings. Here's their distribution rate, 42%. Here's their schedule. So check this out. So today, right? Today we said is what? Wednesday, and it's the 29th, right? They declared, again, declaration date. They declared the 27th. Ex-dividend date, the 28th, right? 28th was what? Yesterday. Yeah, yesterday. It was a Tuesday. And payment date, 29th. All right? Payable the 29th. So CEPI is paying on a Wednesday, right? On a Wednesday. So that's interesting. Now, if we go to, FEPI, we'll look at their schedule in a second on the spreadsheet, but they're more than likely, they pay, actually, let me see. I think it's the day of the week's not important. The thing is, it's off cycle a little, and let me show you in a second, because these are monthly paying funds. There was a reason for this I wanted to show you. So the 29th they pay on this one, and if I go to if I click FEPI, if I scroll down to their distribution schedule, I did notice it was off cycle. So this one pays the 30th. See? So FEPI pays the 30th, CEPI pays the 29th, and I'm pretty sure AIPI pays the 30th as well. I'm not sure why, to be honest, unless it's just 1 month thing, but whatever. I just wanted to mention that. Yeah, AIPI pays the 30th as well. So maybe that's going to be a thing. Maybe, I don't know. Maybe they did that on purpose. Who the heck knows? But I just wanted to mention it. All right, so obviously CEPI launched this. So now we have 3 funds for Rex shares: FEPI, AIPI, and CEPI. To me, FEPI and AIPI are kind of the same. Obviously, one is tech, one's versus AI. And then you have CEPI, which is a little different. But, could be some overlap there as well. But first, let's just get to the file. Let's do CEPI first. So CEPI, again, their first dividend, They paid $1.70. They declared $1.70, which was payable actually, today, as of this video, the 29th. So that's a 42.11% yield. So going forward, I am going to expect a 42.11% yield. Now, that's awesome, but can they keep it up? Can they stay capital flat? Can they have capital appreciation while still paying a 42% yield? Of course, time will tell, but it is, it'll be a good challenge, and hopefully they can. So if you look, CEPI launched at $50.03. So if I scroll down to today, oh my God, you guys hear that wind? Holy crap, it's windy. Right now, they're showing to be, or at least as of the last close on the 28th, the price was $47.20. So it's only been out 50 days, and the market's been down as of late, so maybe this is unfair to pull this information now. But they are down $2.83 in capital, or 5.66% within 55 days. Dividends, they have paid $1.70, which is 3.4% of that, from inception. But obviously that number will grow as they keep paying month in and month out. When you annualize it, we know what they pay, 42% or so. But regardless, total return, again, I know it's a short period of time, but it is what it is. Total return, negative 113. Total return percentage, negative 2.26%. So not great numbers for CEPI right off the bat. Hopefully, again, things get better. Now, let's look at their holdings. So who do they hold? Again, this is CEPI. This is crypto. Okay, they hold Robinhood. They hold New Holdings. They hold Visa, MasterCard, Coinbase, MicroStrategy, Micron Technology, Taiwan Semiconductor, Tesla, PayPal, CleanSpark, Marathon Digital Holdings, AMD, NVIDIA, Riot Platforms, Interactive Brokers, IREN, Block, Rambus, Core Scientific, Fiserv, TerraWolf, Applied Digital Corp, Cipher Mining, and Bit Digital. Now that's a whole bunch of stocks, some of which I don't even know what the heck they are. But regardless, let's take a look at what kind of positions they're holding. So down below, well, right up above what I've listed, these are them actually holding the underlying. So in all cases, they hold the underlying and they sell covered calls on those shares. And you can see the expiration date of 2/21, and then you see the strike price and the C for call. So yes, they're selling covered calls with various strike prices, all with the same expiration date, though, of 2/21. So now let's look and see what's going on here. So here, what I'm doing is I'm pulling the ticker name, the call price, the current price, and how far out of the money they currently are. So again, they have about 23 days or so till expiration. Now, highlighted in green is obviously means they're further out of the money, and then yellow would mean they're in the money. So far, right off the bat, looking good. Applied Digital Corp. Let's see this one. They sold a covered call for $12.50. It went down to $6.56. I mean, that's not good. 90% out of the money. I mean, it's good we're going to win our covered call, but what kind of crappy fund is this? And then this one, TerraWolf, covered call $8. And then it's down to $4.53. We're 76% out of the money. Again, this is probably affected by this China app, So maybe, again, and that just happened. So obviously, in all cases, we're looking like we're going to win these covered calls, but obviously that's why the price of the fund is down. Because remember, they do own the underlying. So if the stock price goes down, the ETF price is going to go down. All right, let's continue. Everything's pretty much out of the money. NVIDIA, that's been going down. That's 28% out of the money. Visa's 4% out of the money. Everything's out of the money. Bit Digital, 70% out of the money. Here we go. Interactive Brokers, 0.12% out of the money. So obviously their stock price hasn't really tumbled at all. And then everything else is pretty much doing good. Applied Digital Corp is 0.46% in the money. And that's a $6 stock too. What kind of crap is that? And then we got Visa, 1.52% in the money. Okay, here comes some problem child. Interactive Brokers, again, the problem, 7.03% in the money. New Holdings, 4% in the money, and Robinhood, 9% in the money. So overall, again, I do the average. The average percent out of the money is 19%. Again, that's great for us to win our covered calls. However, the stock prices have just kind of gone down a little too much. So, yeah, like I said, it's nice to win the covered calls, but at what expense? And then we got the 30-day IV. So if we scroll back up, I'll just see if there's anything over 100%, anything eye-opening. Applied Digital, they're over 100%. Terra Wolf, over 100%. Core Scientific, 102% IV. Bit Digital, 136% IV. Here's a 92. Cipher Mining, 92% IV. Core Scientific, yeah, we talked about those. Yeah, we talked about that one. Clean Spark is on here. They're 102% IV. Iron is 118% IV. But overall, for this fund, they have an average IV of 68%, which is pretty damn high. But they are diversified, that is for sure. They may be holding some shit. Again, I say it loosely because I don't even know what these companies are. Maybe they're great companies that are just having a rough time. But hopefully they're not. Hopefully they're good companies. But we'll see. As of right now, yes, very diversified crypto covered call ETF with a very high yield. But can it have a stable NAV with funds that are that risky, that go down just like that because of a freaking app? I don't know. But again, they just launched. Bad timing. It is what it is. Maybe things will get better. But anyway, that's CEPI. Oh, wait. Did I go through the outstanding shares? No. So outstanding shares, 215,000. Total net assets based on the export, 10.4 mil. And the NAV coming to 48.76, at least per this. All right. So now we did CEPI. So now let's do AIPI. AIPI, again, here's their dividend history. They started off, their first dividend was July, $1.48 dividend. Their most recent dividend was January, $1.45. So they basically have not missed a beat. Their launch price was 51, they're at 50. Their current yield, their forever yield is 34%. That is a solid ass yield. So this is a really good fund so far. Now let's just go to the performance. Again, this price tab kind of tracks what the price was from inception. And again, I don't know why I have every single row and the change every day because I don't really even go through it, to be honest. But I guess it's if I want to make a video where I do. But regardless, AIPI, they opened on June 4th, 2024 at $50.48. And as of the last close, which was January 28th, they closed at $50.03. All right. So that being said, comparing today's price to the launch price, it has gone down 45 cents. So it's gone down in 0.89% in capital appreciation over the past 238 days. However, they have paid out $10.34 in dividends, or 20%. So total return amount, $9.89. Total return percentage, 19.59%. And that's in 238 days. So I have to say, very impressive AIPI. All right. Now, obviously, they have AI in their name. So we would expect them to also be affected by the recent destruction. Let's see. Yeah, down here. I guess that's the day 25th. Went down 3.84%. That's actually not that bad. So let's compare that. What was it on the 25th? To CEPI on the 25th. 25th. Oh, wow. Yeah, CEPI went down 6.38%. So, yeah, they were much more exposed than AIPI. So that's pretty interesting, to be honest. Okay. All right, so now let's go to the holdings. Again, we can I'll go through everything that they hold, as boring as that is, but some people, this may be their first video watching a RecShares video, so let's get to it. So they hold CrowdStrike, Palantir, NVIDIA, ARM Holdings, obviously cash, Meta, Qualcomm, ServiceNow, Salesforce, Synopsys, Amazon, Microsoft, Palo Alto, Datadog, Adobe, Alphabet, IBM, Cisco, Micron, Apple, Intel, Cadence Designs, Arista Networks, AMD, Broadcom, and Super Microcomputer. Sorry for going fast, but again, I'm trying to speed up the video because you guys don't want to hear me just reading the whole time. And then obviously, they hold the underlying, just like CEPI, just like FEPI, every single fund. That's what they do. They don't do a synthetic. They do the underlying, which means they use the cash and they buy the underlying. So that means they're not earning interest from treasuries and bonds. They just own the underlying, okay? And some of these underlyings pay a dividend. Not much, not anything to be too excited about. But hey, better than nothing. All right, so here's their covered calls. Again, they're selling covered calls. Same thing, 2/21 expiration, very popular date. That's a busy day in the options world. As you know, YieldMax has their synthetics expiring on 2/21. So yeah, here's a lot of data right there. So now let's see how they're doing on their covered calls. Again, probably good since market's been going down lately. All right, so right off the bat, Cisco, 10% out of the money. Cadence, 19% out of the money. Arista, again, everyone's out of the money. Microsoft's the closest one, 0.65% out of the money. Meta's 1.86% in the money. Now, 10% of the money. All right, Qualcomm's in the money. Palo Alto's in the money. But everything else, well, Apple, we have one in the money. And overall, man, see, look, like Super Microcomputer, they're 43% out of the money. So obviously, look at the covered call they had, $40 covered call strike price. The current price is $27.79. So obviously the stock price has dropped. Apple, 2.79% in the money. And then we got CrowdStrike, Meta. Again, there's a whole bunch in the money, but more so, much more is out of the money. So it looks like, they're probably going to win most of their trades for the most part, which looks good because, again, they sell monthly covered calls and a lot can happen within the month and a lot can happen before February 21st. So all of this could be irrelevant, unfortunately. Actually, yeah, right down here. See all this? This is a lot of, stuff in the money. Palantir, 11% in the money. Wow. Ouch. See, they sold a call at 70. And the current price of the stock is $79.02. So if this is how it is on 2/21, they're not going to let their shares get assigned. They're going to cash settle. They'll settle the 902 or whatever it comes to, right? But that'll be a loss on the books, right? So, yeah. But overall, the overall average percent out of the money is 5.77%, which, that's to be expected, and it's not all that bad. Now, if we look at the 30-day IV, who's carrying us? Who has the high IV that pays us this sweet-ass premium? Again, they got a lot of holdings, man. But Super Microcomputer really is holding their own, 145% yield. ARM Holdings has 68% yield. Arista Networks has a 60% yield. I mean, Intel, 67. Wow, Intel has 67%. When I say yield, I'm sorry. I've been saying yield. 30-day IV. I'm losing my mind. This is my third video today. Palantir, 83% yield. That's pretty nice. Super Micro again. Palantir, yep, 83%. Yep. Okay. So the average 30-day IV of AIPI is 49%. So that's pretty good. Total net assets of this fund, 259 mil. The outstanding shares is 5.2 mil, which makes the NAV 49.96. Again, per the holdings. All right, so that's AIPI, and next is FEPI. Again, I can't go as detailed as I used to because now there's 3 funds to cover. But hopefully this is a good speed for everyone. All right, so FEPI, I mean, pretty much they're paying 25% yield. There's no doubt about that. And they're holding their own capital-wise. I mean, they're not flat. They've been going down, but still, they're not that bad. When they launched, their first distribution was $1.15, and their latest distribution is $1.05. So again, they're kind of in line. They've never paid under $1. So they are pretty damn consistent. Now let's take a look at the price. What was the launch price, right? If we go to the way beginning, way back when FEPI launched on, do you believe it now? October 11th, 2023. Do you believe it was that long ago? FEPI launched at $51.67. Now, if we go to today, if we could find it, right? Where the heck is today? Today, or as of the last close, it's at $49.80. So that's pretty good. That is actually pretty damn good. So that's a capital depreciation of $1.87 within 475 days. Not bad. Or a loss of 3.62%. However, again, keep in mind, they paid out $16.87 in distributions. All right. That's a 32% return in 475 days. Now, if you look at the total return amount, it's $15, which is a 29% total return, again, in 475 days. And that's without drip. If you dripped it, obviously you'd be up a lot more. But this is, reflecting with taking the dividends as cash. Okay? Makes sense? Good. Now, here are the holdings export, again, as of the 29th. This is FEPI, good old FEPI, the OG. FEPI's awesome. I got nothing bad to say about FEPI. All right, FEPI holds Palantir, Netflix, Meta, Salesforce, Amazon, Adobe, Microsoft, Intel, Alphabet, Apple, AMD, NVIDIA, Tesla, Broadcom, and Micron Technology. And then they got some cash, and then everything underneath is covered calls. Same expiration as the others, 221, 221, 221, and 221. So what we want to do from here is just see if there's anything crazy, anything out of the money, anything in the money. Again, for the most part, they're probably going to be mostly out of the money because the market has been down thanks to China apps. So let's see. Well, they got Apple in the money, Amazon in the money, Meta in the money, because those weren't, I guess, really affected too much. Salesforce in the money, Netflix in the money. Well, Netflix has been doing pretty good, which is, obviously the stock price of Netflix has gone up. I thought it was at another 52-week high is at $9.99. Right now they're at $9.72. Their covered calls at $8.90. But again, it could come back down. But if not, they got to cover that gap. All right. So what else? Out of the money. Yeah. So for the most part, again, it's kind of like AIPI. They're averaging 5.23% out of the money, which, it's not bad. But that's with, the tanking of certain funds, right? NVIDIA. Actually, they're only 15% of the money for NVIDIA. No crazy ones like CEPI. NVIDIA up here, 27% out of the money. And if you look at the 30-day IV, they got Intel with the big ones, 67% IV. And Palantir, 83% IV. And you'll notice there's a lot of overlap between all the funds, which, it's unfortunate, but it is what it is. But if you own all three, obviously, that's a lot of different funds. That's a lot of diversity. And they have various yields, but who's going to perform the best? Time will tell. Their average 30-day IV is 45%, and we'll compare that to the other two in a second. So their total net assets, they're a pretty big fund, 473 mil. They got 9.5 mil outstanding shares, and their NAV is 49.81. All right, so let's take a look. FEPI IV average 45%, okay? AIPI average 49%. CEPI average 68%. So obviously it makes sense because CEPI pays the highest yield, AIPI is next, and then FEPI. So yeah, so that's the update on all the funds. Again, it was kind of a quicker version, but for the most part, how these funds work, again, they own the underlying and they hold the underlying, and then they sell covered calls on the same underlying. The difference is they don't let them, like these, see this Robinhood? It's in the money, right? They're not going to let their shares get taken away. They'll cash settle. They trade options on the Flex exchange, which is a European exchange. And the beauty of that exchange is you can't get assigned, right? You don't get just assigned early, essentially. So you have the chance to cash settle at the time of your choosing. So that's what they'll do on this. And guess what? When they have to cash settle, that's accepting the loss. So even though some of these funds that they're holding and not selling, they're going up in appreciation. So in the ETF, you'll see the ETF going up. On the books, they're having losses that they have to settle on the covered calls being capped. So that is how they were able to pay return of capital. So if you go into the 19A1 notices on the website and you notice, okay, or even you may even get the annual statement soon. I don't know when they come out, but if you notice that most, if not all, of the payments are return of capital, that's exactly why. Because again, they don't sell their holdings to take that capital appreciation. The only time they would sell their holdings is when they need to reallocate to make sure it's equally weighted. And I believe they do that once a month. It could be more frequent if needed, I'm assuming. For example, look at Robinhood, 6.14%. That's the largest holding percentage. And then this scrub right here, 0.9%, because they probably tanked, right? They probably took a tanking. So obviously, yeah, it's almost time for them to do a reallocation. And that at that point, they'll have to sell some Robinhood. So if there is capital appreciation associated when they sell that Robinhood, then so be it. Then obviously that'll get counted as income, just like any options premium that they do make. But again, hopefully that makes sense. If you have any questions, please let me know. You can leave that down in the comments below. I did interview RecShares, Scott from RecShares, and that interview's maybe a few months back, but if it does interest you, go check it out. It's under the live section of my YouTube channel. But obviously you can ask me, you can write in the comments, or feel free to just join the Discord via the link on my channel. And we do actually have a channel that is for specifically RecShares, and there's a lot of people who love RecShares who you can ask in there as well. But let me know what you guys think of these funds. Which is your favorite of the three? Do you own all three? Do you own one or two? And if so, why? Why one versus the other? I own FEPI at this very moment. I don't own AIPI just because of the overlap and because at the time they were 100% maintenance on Charles Schwab. I think they did lower it, but honestly at this point I'm kind of waiting for CEPI to be lowered, and I may be on board with CEPI. I don't like that FEPI and AIPI has so much overlap. CEPI has a little less overlap from FEPI, so I may look into that. But let me know what you guys think. Which ones do you own and why? As always, this is not financial advice. I am not a financial advisor. This video is for fun and entertainment, so hopefully you had fun. Hopefully you're entertained. If not, then we'll try again next. I don't know. I'm not going to say next month because I can barely get to these once a month. Maybe every 2 to 3 months I'll cover these, but you guys can let me know how frequent you do want to see these updates. But now it's a little more work because it's 3 different funds, doing 3 different exports, then different calculation averages, so on and so forth. I mean, it's not terrible, but it's just is what it is. But on that note, I'll end it there, and I just want to say thank you guys for watching, and I hope you have a great day. Later.